Namaste. This clipping is on measurement of national income through the income method. First, we would see the components of the income method. In the next clipping, we would see the actual calculation and the precautions that is to be undertaken for income method of calculating the national income. So, through the income method, how do you calculate the domestic product and the national product? Income method, the very name should tell you that it is going to be the factor incomes that are going to be taken into consideration. So you already know that there are four factors of production, namely land, labor, capital and organization in the process of production. So the factor income that is due to the factors, namely the wages, rent, rate of interest and profit, are the four major components of the income method of calculation. We would see the first major component first. Compensation of employees. The very name again should tell you that it belongs to the laborers. Now why is this called as compensation of employees? Because given a chance, anybody would like to enjoy their leisure time. But just because the laborers are toiling out mentally and physically, they need to be compensated for the loss of their leisure time. So that is why wages or salary is offered to the employees or the workers for turning out their labor. So in the production process, the remuneration to the factor labor is compensation of employees. This compensation of employees can be further classified into wage and salary that is going to be given in the form of cash. So, the wage and salary with the permanent laborers might be receiving, it could come as the basic pay and various other allowances like the dearness allowance, the city compensatory allowance, and then the house rent allowance, the leave travel allowance and so on. So the basic pay plus the allowances, and once in a year they could be receiving bonus, plus if they are going to be turning out some kind of brokerage or an agent's work, they would be receiving commission. So, the payment in cash will include the basic pay, the various allowances, the bonus and of course the commission which is paid in cash. The next category under COE is going to be payment made in kind. There are so many departmental undertakings. Also, there are so many private firms which provide the employees with rent-free houses, free education, free health and such services. They could even give free car and so on to the employees. So all such freebies that are going to be given to the employees is very much part of the compensation. So that would make up the payment in kind. So we have the payment in cash and then the payment in kind. The next one is the employer's contribution to Social Security. What is this employer's contribution to Social Security? The pension fund, the provident fund, employer's contribution to the provident fund, contribution to the employer's insurance schemes. So all these are the employer's contribution. None of it would be the employee's contribution because the employee is going to make the payment out of the wages. He receives the wages and out of the wages he will be making the payment. So do not include employee's contribution to Social Security. only include employer's contribution to the social security. So, the COE is threefold: the wage and salary in the form of cash, the payment that is made in kind, and then the third major component is the employer's social security contribution. So that would be the return to the factor labor. The next factor is that of land. For land, it is the actual rental that is paid, and also the imputed rent has to be taken into account. What is this imputed rent? The owner occupied area, the owner occupied building, for one's own business, it has to be taken as imputed rent. Let's say the building is owned by the entrepreneur and he is going to make use of this particular building for his own business sake. Now, had he rented it out, he would have received a rental, but instead he decides to make use of his own building for the sake of production. So, there is an imputed value or an inherent value of such self-occupied building or land. So, the imputed rent and the actual rent that is paid to outsiders for hiring the land and building will be very much part of the factor income. The next component is royalty. Rent and royalty sometimes are given together. Royalty is a payment that is going to be made for hiring subsoil asset exploitation like that of minerals. So if the land is going to be leased to exploit the natural resources, there is a royalty that is paid for such usage. So rent and royalty, they come under the factor land. They become the factor payment to land. The next component is interest. Interest, all of us know, is paid for usage of capital. So, what sort of interest should be considered for national income calculation? The interest on the capital that is going to be borrowed for only the productive purpose will be included for national income calculation, and no other interest payment will be considered under this category. For instance, if the consumer households are going to borrow from the bank to buy up various consumption articles and they end up paying a rate of interest to the bank, such interest will not be considered because it is basically for consumption purposes that they are taking up the loan and thereby the interest is paid. This is not a factor payment. How about the government? The government may be floating public debt, and the interest that is received by the population on such public debt is also not to be taken into consideration, because the government is said to be borrowing to keep up the welfare of the population, and that's also considered to be for consumption purpose. To run the various administrative departments, it could be gathering such fund. So, that interest is also not to be taken into consideration. It is only the interest for the amount that is going to be borrowed for productive purpose which would make up the factor payment, and only such interest will be taken into consideration. So we have the COE or the compensation of employees, we have the rent, the royalty, and then the interest. The next component is profit. Profit is supposed to be the last or the residual factor payment to the organization. After paying up all the other factors, the residue or the leftover amount is what is the profit or the entrepreneur's income. Once a firm receives enough profit, it's supposed to first make up the mandatory payment, which is the corporate profit tax, which is in other words called as the corporate tax, or in some books they also have mentioned it as corporation tax. So the corporate profit tax or the corporate tax is the first payment that is made from the profit of the firm. The second payment, that is if after paying the taxes the firm is still going to be left with some amount of profit, then it would be duly dividing that among the equity shareholders of the firm. So that would be the distributed profit among the shareholders, or in other words that is called as dividends. After making the corporate tax and the dividend payments, still if the firm is going to have some more profit left, then that would be retained for plowing back into the business in the future. This you might have understood in your business studies, the retained concept earning, the plowed back earning. So that is the undistributed profit or the savings of the corporation, that also becomes a contingency fund of the corporation. So profit, it is basically subdivided into three parts: the corporate tax, and then the dividends or the distributed profit, and then the retained earning or the undistributed profit. So these are the three components of profit. Now you take up the last three components of this particular method, namely rent, interest and profit. Rent and royalty, they go together. Rent, royalty, and then interest, profit. These three payments together, they are called as the operating surplus. Depending upon the scale of operation, depending upon the efficiency of the organization, this component keeps changing. Let me repeat: the rent, royalty, the interest, and then the profit together, they are called as operating surplus. Now, the four factors of production and their factor incomes are discussed. In a nation like India, there are so many small entrepreneurs, unincorporated organizations who are going to pump in more than one particular factor payment. Let's say a small shop, a sole proprietor. Now he is going to probably set up the shop in his own building. He is going to be the owner, he is going to be the worker, he is going to bring in his own capital. So you see that a number of factors are supplied by such a small firm for the production process. So if such a sole proprietor is going to make up his profit, then this factor income, how will you define it? It's very difficult to find out whether it is just the profit or return to the sole proprietor for his proprietorial or managerial skills, or whether it is the rate of interest, or whether it's a prime location and thereby the rental value. Which is it? So such income of small and unincorporated organizations, it is called as the mixed income. Due to supply of various factors of production and thereby various factor incomes thereupon, such income is called as mixed income component. Sometimes for calculation, the mixed income component will be given to you, sometimes it may not be given to you. If it's not given to you, assume that it is zero, make a note there, go ahead and calculate. Right? So on the whole, we have 5 major components here: the COE, rent and royalty, rate of interest, the profit, and the fifth one is the mixed income component. So these are the 5 major components of calculation of national income through the income method. In the next clipping, we will see the calculation, also the precautions that are to be undertaken to calculate national income through the income method. Keep watching. Thank you.